it seems to be a setting.
If you go into settings, you can find it.
If I can just find where settings are, because only banners, media,
If you,
assets, style.
if you look all the way on the bottom, there's a settings wheel all the way on the bottom of StreamYard.
Okay, hold on. I gotta stop sharing. Hold on. Settings, camera. It just has camera.
You want to go to
Visual effects. Got it.
visual effects.
Wonderful. Thank you so much for your help.
No problem.
Okay, let me share my screen again. I'll do that in a minute. All right. Good morning, everyone. Hello. If you hear me good, thank you so much. Good morning, John, Tom, Andrew, Gallivan, Leonard. I'm glad that all of you are doing good, and Daniel for telling me that audio and video are going well. All right. So I love Mondays. Mondays is, my favorite day of the week because we get to sit together and we get to learn, plan, prepare for the new trading week. Thank you, Droopy, for picking up the book. I don't know where you are, but I wish I could sign it for you. But yes, prop trading secrets of successful traders is a very, very popular book. So grab it if you haven't already. Those of you that are new here, let me know who you are. Is this your first time joining us for a Monday live stream? I know, May, you are not a first timer. You were a first timer last time, I believe, when we were live trading the inflation report. So I'm so glad. Welcome back to the channel. We had quite a lively session last week, and we locked in another winning trading week, trading the U.S. inflation report. It's knock on wood. There's a lot of wood around me right now. We tend to do pretty well when we live trade. Unfortunately, there's no live trading for me this week, but Boris is going to be live trading every day because this week we don't have those tier 1 economic reports that I love to trade with all of you, like non-farm payrolls, the inflation report. Those are the events that we really like to trade, and sometimes retail sales, but we don't have that this week. This week is a much lighter week for U.S. data. But that does not mean we won't have action in the markets because there's a lot of headline risk this week. But even though I don't have a scheduled live trading session because we don't have data to trade, Boris is going to be live trading every single day on the New York Open, so make sure that you join him. Welcome, Daniel. Welcome, Alonzo and Legacies. First time all the way from China. It's dinner time for you over there, aren't you? Chippy, if you are a VIP member, we have a link that doesn't change, and that should be in your calendar in the community. I will also post it tomorrow or later today so that you have access to it in our VIP chat. If you're not a VIP member, consider becoming one. Just go to our community and you can find out how to do it. Welcome, Anjang. Welcome, everyone, to our live stream. All right, before I begin, what are you trading? Let me know so we make sure that we touch on everything that you are trading and everything that we need to talk about. As I said, there's not much in the way of what we call tier 1 economic reports, supermarket moving releases for the US dollar. But as my friend Daniel has said, we have a lot of headline risk. We have the Fed meeting, not the Fed meeting, the FOMC minutes. We have Jackson Hole, and everyone is waiting for that meeting between President Trump and President Zelensky to talk about what happened out in Alaska with Putin this weekend. Seems like a whole lot of nothing happened. And so we'll have to see, whether we get some interesting headlines out of the meeting between Zelensky and Trump. Now, as traders, we talk far less about, the political ramifications of all of this, and much more about the economic, not even so economic, but market implications for the talk. So the deal here is that President Trump basically, threatened more sanctions on Russia if a deal was not reached, a ceasefire was not reached. And clearly a ceasefire was not reached. Maybe they were waiting out for something in Ukraine, but I don't think so. So if things remain status quo, it's going to, in my opinion, create a little bit of stress in the markets. But I mean, it's pretty much status quo. I mean, it's terrible for Ukraine and the war that's happening. But I don't think the market would be entirely surprised by the continuation of what is happening right now because they already discounted. The only surprise would happen if there's suddenly a ceasefire. If there's suddenly a ceasefire, that would be, in some ways unexpected good news because the market has not discounted that in. And so it's unexpected good news. And that would rally the markets and rally the euro. So the point that I want to make is if out of the Zelensky Trump meeting and maybe press conference afterwards, there's no news. The war is continuing. They're going to continue to talk. I think it'll be mildly bearish for the euro, mildly bearish for the stock market, but it's going to recover from it quickly. But if there's suddenly some sort of agreement for ceasefire, which would be completely from left field at this point, especially if it comes from the Ukraine discussion, not the Russian discussion, that would be, I think, pretty immediately positive for the euro as well as positive for stocks because it would be a removal of an immediate geopolitical risk. Now, I have no idea what's going to happen. I'd be happy if you would share your views on whether or not it's going to be a nothing burger or we're actually going to get some sort of big headline risk. But in my opinion, I think it's going to be nothing. I think it's going to be, they're going to continue to talk and that's about it. So that's the first headline risk that the market is waiting for. The second headline risk is the Fed minutes, which I believe is Wednesday. The Fed minutes, we know that the Fed is getting closer to, we know the Fed is pretty much guaranteed to cut interest rates in September. So the Fed is pretty much guaranteed to cut interest rates in September. And I'll show you, Chippy, later how to access your calendar. But maybe your status is not correct. Email me at Kathy@bktraders.com and we'll look into it. But the Fed minutes, we know that the Fed is going to cut interest rates in September. However, we also kind of know that at the last meeting, there were the Fed Powell was still kind of resistant to it. So I think that the Fed minutes themselves is going to show a tinge of cautiousness. I don't think it's going to provide as much conviction as the market wants because the market saw the CPI report, they saw the inflation, so they saw the jobs report, and they're thinking, okay, the Fed has the numbers to cut interest rates in September. But the Fed did not necessarily have these numbers at the last Fed meeting. And so even though that may be the case, I think that the Fed minutes is, if it sounds like it's not dovish enough, any rallies, in my opinion, should be sold immediately for the dollar. And any pullback in the stock market should be bought. But I think that there may not be much reaction because really the big event this week, the primary event for the dollar is Jackson Hole. Now, Jackson Hole begins the 21st. I don't have my calendar. I think that's like Wednesday, I believe, or Thursday. It begins so it goes to the weekend. So we will not necessarily get the statement from Jackson Hole till the end of the week. So while Jackson Hole is going to be the main event that everyone is focusing on in the beginning of the week, we're not necessarily thinking another meeting. So it's Thursday. So it goes to Thursday to Saturday. So we may not get the statement until Saturday. So the market's going to be closed already. So while Jackson Hole is the biggest event this week, as one of my friends earlier, Daniel, I believe, Daniel Roll said, should it be treated like NFP this week and trade up until the actual news? Yes, because really the actual news not until the end of the week and probably not until the weekend. So we're going to trade as normal because this is a huge event risk, but we're not going to get the outcome of the event risk until probably Saturday. And the outcome that we're looking for is oftentimes the Fed likes to use the Jackson Hole Symposium to lay the groundwork for the next big policy change. And that next big policy change is going to be basically the rate cut. So the Fed could, basically admit that they are cutting interest rates next month And if they do, however, that's not going to be coming until the weekend. So as Daniel rightfully points out, we're going to be trading as usual. And because we don't have much in the way of US data this week, there's going to be, in my opinion, a lot of really great relative value plays, meaning that, euro against Aussie, euro against CAD, CAD against Swiss franc, things like that. And I love to trade crosses. And for those of you that have not watched already, I just posted a video on our YouTube channel on the top 10 tips, my top 10 tips for trading the euro. So if you haven't watched it yet, you should, because I also talk about how and why I love to trade euro crosses and how they are my favorite instrument currencies to trade and my most profitable. So make sure you go and watch that video. Now let's go to our heat map and talk about how everything in a little bit more detail. So give me 1 second. I am going to share with you my screen. And okay, I'm seeing here that you guys are trading ES. Great. Boris is going to be we're going to roll into live trading ES right after I talk. ES, NQ, gold. So for Tom, Peter, and some of the other ones here that are trading futures, we're going to be, Boris is going to be live trading that with you and showing how we do it. For currencies, euro, yen, we'll talk about that. And that's great. There's a really good question here from ZJ, which is, if there's no news like today, how do you place a trade? Well, if there's no news like today, you stay true to your setup. You stay true to, what you trade normally. We'll take a look at my setup to see if there were some trades, but we will trade, when there's no news that could potentially sabotage your trade, that's when I think it's pretty much golden to trade your setup and to stay disciplined to it. All right, so now you see my heat map. Let's talk about, what I expect is going to happen today or this week. So for the most part, we're starting the week with consolidation. Equity market is down a little bit. The dollar is mixed. U.S. Treasury yields are down a little bit. So pretty much consolidation. I am still bearish dollars. There is no reason for me not to be bearish dollars and to change my mind on that, because we had the weak jobs report, we had the weak inflation report, retail sales, it wasn't bad, but it was okay, but it wasn't good enough to remove the chance of a rate cut next month. It was good enough to to basically cast out anyone who thought that we were going to get a half-point cut, which was, I didn't think was going to happen at all. I think they're not going to come out with a half-point cut. So 25 basis points, is still coming next month. And this week, I think that the market is going to, believe that Powell is going to set the stage for that interest rate cut at Jackson Hole. So I think the dollar was going to remain under pressure this week. And we at BK are going to be continuing to look for opportunities to sell dollars on rallies. I am bullish euros this week. This is, we've got the PMIs this week from the Eurozone. So, that's quite important. And what happened to my screen here? Did you touch something, Boris? Let's see. Share screen. Let me bring back my screen here. There we go. I'm going to remain bullish euros. Data from the Eurozone actually hasn't been quite bad. Data from the Eurozone has been quite good. And so I am still bullish euros. I still think euro will eventually make its way to 119, 120 off of the dollar bearish view. So I'm going to remain bullish euros and look for opportunities to buy euros on dips. I'm bearish pounds. This is an important week for pounds. We have the PMIs, we have inflation, we have retail sales. So pounds is very much going to be in play. And unfortunately, data in the UK hasn't been great. The only thing that could support the pound and limit any losses is the fact that when they last met at the last Bank of England meeting, it was a really tight vote. I think 5-4. So they cut interest rates. 5 voted to cut interest rates. 4 voted to leave interest rates unchanged. So that meant that a number of them believe that interest rates should remain unchanged. And so as a result, that they're not going to be cutting interest rates next month. But still, I think that data is going to be weaker this week. Aussie, I'm bearish Aussies. Next to the Federal Reserve, the Reserve Bank of Australia is expected to be the most dovish central bank for the rest of the year. So I'm going to repeat that again. Next to the Federal Reserve is expected to be number one. The Reserve Bank of Australia is expected to be the second most dovish, Fed the most dovish, RBA the second most dovish for the rest of the year. So therefore, I kind of got to be Aussie bearish because they are expected to be to cut interest rates further and could even come next month. The Bank of Canada, data from Canada hasn't been great. This week we have inflation data. We have retail sales data from Canada. I am bearish both pieces of reports, especially since the jobs report from Canada recently was so weak. So I think the Canadian dollar, which had been moved quite higher, is now a little lower. I think is going to see further losses. Now you can say, Kathy, you're dollar bearish, you're CAD bearish. What in the world does that mean for trading? That means that maybe you want to look at Euro CAD, bullish Euro, negative CAD. Maybe you want to look at CAD yen or something like that. Or, what it really means to me is, I can sell either. Day by day, I'm going to look at, which one is moving more on a percentage basis and weaker on a percentage basis. And that's how I'm going to guide my trades. I'm also going to look at my setup, obviously. New Zealand, we have a Reserve Bank of New Zealand rate decision this week. Now, I love it when we have rate decisions because we create my rate decision table. And let me see if I can share my rate decision table with you here, where I invite all of you to put yourselves into the shoes of the central bank. And how do I share this? Let's see. I invite you to put yourself into the shoes of the central bank and figure out what would you do if you were the RBNZ. So this is my table for the Reserve Bank of New Zealand. And I basically put together how the data from New Zealand changed from the last meeting. Yes, Legacy, we stream every single Monday. It's my favorite live stream, the most valuable live stream, in my opinion. So based upon this table, and based upon the red and the green, red being Kiwi bearish, green being Kiwi bullish, if you were the Reserve Bank of New Zealand, would you leave interest rates unchanged or cut interest rates? Pop quiz. Would you leave interest rates unchanged or would you cut interest rates? I want you to type into the comment and let me know what you would do if you were the RBNZ. Sometimes it's an easy answer. Sometimes it's a hard answer, I will admit. Fred says cut. Martin says keep same. Peter says unchanged. Irvav says cut. John says cut. And I think the fact that there's no consensus here tells you how sometimes it's a very difficult job for the RBNZ. So let's look at what's more important, less important. Consumer spending. Consumer spending, we have card spending growing at a slower pace, but year over year, we're still up. Consumer confidence is down. Labor market activity was very weak in the second quarter. We had job losses. We had the unemployment rate increase. We had the participation rate drop as well. Activity, though, improved. So we had the PSI come out this morning or last night, and it came in better, but it's still negative. A number below 50 right here means that it's negative. It means that the sector is contracting. A number above 50, like the business PMI, which measures manufacturing activity, means that it's expanding. So we have contracting service sector activity, but better. Expanding business PMI, but better. Not sure why this keeps on going in and out. I apologize for that. Let me do it again. So we have business confidence improving and trade balance weakening. Inflationary conditions quarterly is lower. Year over year is stronger. Global dairy trade index is weaker. So overall prices are neither here nor there. Some indications that they've weakened, some indications that they've increased. Housing market also, there's some improvement, but they're still down from the previous period. So house prices are still falling. So overall, like Manny said, it's very difficult to tell. But I think our friend here, Harry, has the most. Where is this? I want to highlight Harry's comment. Hold on. All right, I can't seem to grab it right now. Oh, here it is. All right, Harry has the most accurate comment, which is they're probably going to cut interest rates because the market expects them to cut interest rates, but they're probably at the end of their easing cycle because data really hasn't deteriorated that much, and so as you see from the table, there's really no significant urgency for them to cut interest rates. So either they're going to leave interest rates unchanged, or they're going to and that would be widely Kiwi positive because the market expects a rate cut, or they're going to cut interest rates and be neutral, which I think will also be positive for Kiwi. So I think that we could have a bit of a Kiwi rally. I don't think they're going to be it's going to be a dovish cut like the RBA, but you never know. Now the Swiss franc. The Swiss franc, we don't have much going on for Switzerland this week. Overall, the data has been weak. They've been hit with very significant tariffs, which means that the economy is going to weaken further as a result. They can't seem to have. So far, we've had no positive headlines related to trade talks between the U.S. and Switzerland to get rid of those nearly 50% tariffs. So I'm not positive at all. I think overall Swiss franc is very negative in my opinion. I'm bullish the Japanese yen. We had really, really good GDP numbers in the second quarter from Japan. In fact, they had the strongest GDP numbers of all the, of the major currencies that we trade. And so they're getting closer to possibly raising interest rates at the end of the year. Nothing is a done deal. I don't think that it's set in stone yet, but I'm still bullish yen as a result. So these are all the things that I think in terms of what's expected. Now let's take a look at the calendar. Let me just get the calendar up and running this week. So as I said, we had PSI. It was stronger. We had some stronger Japanese data. We are continuing to see a little bit of a trend of stronger data from Japan. And sorry, I'm going to pull up my table. This is a table that I put together for our BK traders, our VIP members, where I get my predictions for the entire week. I've actually forgotten some of the predictions, which is why I'm pulling it up. So New Zealand inflation data. We had weaker consumer prices, so that could come out a little weaker, which is part of the reason why I'm neutral Kiwi at the beginning of the week. CAD has inflation data. IV PMI saw a drop in prices, so these will probably end up being a little softer as well. And then we have U.S. Housing prices, which probably won't matter. Since this could be softer, that could help the long dollar CAD opportunity that I think could manifest itself. And then, trade data from Japan probably going to be better. Here's the RBNZ rate decision on Tuesday evening, where, as you can see, the market's expecting a 25 basis point rate cut. On Wednesday, we have UK inflation data, and they're actually expected to be stronger. Because manufacturing reported slightly higher prices. We'll have to see. Maybe it was stronger because maybe that was the motivation for the Bank of England, the 4 people in the Bank of England, to vote for unchanged rates. So watch out for the potential for upside surprise there. A bunch of Fed speak on Wednesday. We have the FOMC minutes on Wednesday as well at 2:00. Minutes are, can be quite market moving. So definitely keep an eye out for that. But I don't think it's going to reveal anything new. Then we have Australian PMIs, which I think could be a little weaker, especially with the dovish RBA. We have the Japanese PMIs. We have Eurozone PMIs, which are going to be very, very important. Now, with the Eurozone PMIs, I think we had a weaker ZEW survey, weaker industrial production. So these numbers will probably come in softer, kind of what the market expects already. And then on Thursday, as you know, the jobless claims reports have become more and more important. And then we have flash PMIs. Then Jackson Hole Symposium begins on Thursday. So Jackson Hole Symposium begins on Thursday, and that is expected. That is just because it begins doesn't mean it's headline risk immediately. Powell is speaking on Friday. That's when we're going to get the headline risk. And then I think the statement is going to be released after that. So Friday is the first day we'll get any opportunity for movement off of Jackson Hole. But that's already the end of the week. So I think it's better just to, listen to what he says at 10 a.m. For my BK traders, we know that we are done trading already by then. So we'll look for the opportunity the next week. off of any follow through after that. And then we have Canadian retail sales, which is probably going to be weaker as well due to the weaker jobs report. So question here, Besant says that Japan is an inflation problem. I mean, Japan does not, they're coming out of deflation. They barely have any inflation. But, clearly the U.S. Treasury wants, the U.S. government wants the yen to be stronger. And, Japan, the data is improving. And they are moving towards a rate hike anyway. So, either way, the yen could strengthen. Is Powell going to be hawkish at Jackson Hole? Maybe. I can't predict what Powell's going to say. Maybe he's going to be hawkish.
Yes, he will be. He'll be hawkish just because I have a feeling. The Fed speak generally that's been coming out this week has not been dovish at all. They've been saying, yes, there's still inflationary pressure, and I think that I think it's actually 50-50 whether they're going to cut 25 basis points or not. But I definitely think he's going to be hawkish because I don't think he wants to set any expectations of a dovish cut. So I'll let you go.
Let's put it this way. If he's hawkish, that would be a huge market mover. And that would be completely what the market does not expect. Now, Boris may say it's 50-50, but the CME Fed Fund futures are pricing in 100% chance of an interest rate cut in September. So the market thinks that that there's going to be an interest rate cut. So the surprise, of course, is when there's anything to cast doubt on that, which is why if he is hawkish, that would be the big mover. If he is, if he paves the way for an interest rate cut, which I think is going to happen, because the Federal Reserve doesn't like volatility, in my opinion. They don't like, no central bank likes up-down movements constantly. And so their job is to kind of minimize the market reaction when an action is taken. So if they are serious about, and they really plan to lower interest rates in September, in order to reduce the volatility when it happens, and to basically, their ideal scenarios, they cut interest rates and the currency does not, and the stock market does not move at all. And in order to kind of achieve that is you have to set market expectations. And to set market expectations that they're serious about cutting interest rates in September would be to use Jackson Hole to pave the way to that. The only way they would be hawkish, like Boris says, is if they are not serious about cutting interest rates. And that is something that is not what the market expects, and therefore would create a bigger reaction in the markets. So it could be, quite an interesting, it will be regardless, quite an interesting Jackson Hole summit, as well as statement that the market's looking for. All right, let's look at the charts. So let's look at the charts, and then we're going to go to live trading with Boris. So give me 1 second, and let's look at the charts together. So let's look at the charts. Some of you have been asking if, let me put on my zip indicator, if we have days like today where we have no movement at all, how do we trade? Well, for me, we just look for our zip signals. You can see I have zip alerts coming up. Now we only trade certain sessions, so we didn't trade today, but if I'm in the buy zone in dollar yen, I'm going to be looking for opportunities to buy. And that means that dollar yen is the background's green and it's above the indicator line. In euro dollar, it means that this is a zip sell signal where we have a white candle with a red background. This is a zip buy signal where we have green candle with, a white candle with a green background. And this became a really beautiful long trade. Now, I don't trade Mondays because usually we have more consolidation and back and forth and continuation. So we're not trading today. But this is an example of what it would be. And this is an example of how my bias would be bearish. Now, looking at the longer term charts, euro dollar, I can tell you still above all of the major moving averages, so still bullish. Now, we do have lower highs, lower lows. I'm still bullish it. If we break below 1630, then we could see a more deeper move lower. And then I would be slightly more bearish it, but I think it should hold. But if it doesn't, I'll be ready to adapt. Dollar yen looks like, because we have no news this week, we could have a little bit of a rally. It is already above most of the major moving averages. If we close here, then the next resistance level is at 149, so we could potentially get there. Dollar CAD, we're starting to roll over in dollar CAD, but I think it's a buy. If it goes to 37.50, I'll be looking to an opportunity to buy dollar CAD. Dollar Swiss, I'm looking more positive than The dollar is looking more positive than against any of the other currencies, partly because of those tariffs and how bad the outlook for Switzerland looks. I think it looks really good to the upside. I think that, there's a very, very good chance it could rally to 81.70. Pound dollar, just consolidating, doing nothing. It's still kind of above all the major moving averages, so it's still bullish. Now, if we drop below the 50-day SMA, below 135, then we could have a deeper slide down to 134, but right now it's still holding. Aussie is weak. It is, and this is a pretty ugly candle. This is a bearish candle. If it closes like this, then we're definitely going down here. And I think this is just indicative of front of the week, nothing going on, dollar recovery after the recent losses. So we could see it go down 64.60, which really is not a big move. It's only a 40 pip move. So that's what I think is going to happen. Kiwi dollar, we had a really good Kiwi PSI, but not good enough to take it above all of these major moving averages because we had the rate decision. So I think that, first of all, I think the PPI is going to be weaker. The RBNZ is set to cut interest rates. So I think it's going to trade with a downward pressure up until the RBNZ rate decision. So that's basically the outlook for the markets on a technical and fundamental basis. A lot of great comments here. Oliver thinks he might be dovish, but I think he will be hawkish because the market's probably pricing it in. Another mutant says we get at least 25 basis points in September. The question is whether or not we'll get 50. Solon Noob says, I think the CPI news, the market kind of priced in 50 already, but PPI slapped in the face. And that's what is great about trading. That's what's great about fundamentals. And that's why I love that you're all here with me, because you are all understanding the importance and value of understanding fundamentals. Whether or not you trade on it, it's really good to keep in the back of your mind because it's going to keep you out of certain things and help you make better decisions. We do this every single day at BK, and Boris will tell you more about that later. I have a question. Why would the Fed want pressure Japan to raise interest rates? They want Japan to have a stronger currency so that maybe they buy more from the U.S. The U.S. buys less from them. Maybe they want U.S. dollar weakness, so people are more encouraged to buy from the U.S. There's a lot of reasons for that. Would you say it's a good strategy to trade only the best setups, less frequency? Absolutely. I have drilled down my setup to trade only specific times a day to avoid specific events.
Okay, no, you didn't read the full question. It's an interesting question. He's saying increase leverage. If you're in drawdown, is it a better choice to trade larger size but less frequently with better setups? It's an interesting question. I don't really have a perfect answer for that. But I would say probably yes. I mean, certainly when doing prop trading, I found that, if I'm in drawdown and I'm just selecting very, very few setups, but doing full leverage, you tend to come back a little bit more. Yes. I mean, as everything else in trading, there's never a perfect definitive answer, but it's not a bad strategy to do that. I think it's not a bad.
All right. And I think this is a fantastic time to pass the baton over to Boris. I think I answered most of your questions. And I invite you all to join our BK Traders community because every single day we talk markets and we talk about what's going on fundamentally. Technically, I walk you through my zip trading setup. I show you the trades that we've taken. I think last week was another winning week for us. So I think it's like the 16th straight winning week for us. So it's been really, really good. And we hope to continue that performance. If a currency is bullish based on fundamentals, but technically is at a strong resistance, would you still look to buy? No, that plays a very big role into it. And that's how we weave fundamentals with technicals. I always look for moving average clearance. We also talk about how whether we're at the top upper right-hand corner or the lower right-hand corner of the chart. And that, whether that is the case or not plays into whether we take the trade and also plays into the effectiveness of what we do. All right.
Okay, guys.
Boris has got some really exciting things for you. He's going to be live trading for all of you that have been asking about NASDAQ, gold, ES. This is the man. Tell you all about it.
Okay. Thanks, Kay. Thank you very much. We'll see Kay later. Thank you. Yep. Let's get started, guys. Let me see if I can get this organized here. I want to put myself on here to stage. Okay, hang on just 1 second. Sorry, I'm trying to do something here. To stage. There we go. Okay, sorry. And we're gonna change. We're gonna add my screen. Okay. All right, you guys should be able to see my screen and everything else. Let me know if all is good. Are you guys seeing the screen? Are you guys seeing everything? Let me show the comments over here on the stream. And we should be good. Yes. All good. Everybody's seeing everything. Okay. Welcome to Live Trade. I had an interesting Friday with you guys. I actually funded another 25,000 account on Friday, and then managed to burn one today. But all of it in really valuable research, because I was fooling around with something that I think I have really nailed. So let me just see. First of all, hang on a second. Let me see if the new account has gotten lit. Let me see if the new account has gotten lit, which means that I should have a new funded account. Yeah, I have a new funded account. Cool. All right. So we have 1, 2, 3, 4, 5. Wait, 1, 2, 3, 4, 5, 6. 6 funded accounts here, 2 funded accounts on Wealth Charts. And I'm going to just work the 8 and the 9 account, $25,000 accounts today. I'm going to show you the approach that I've been using after experimenting with one of my live funded accounts, unfortunately, but it was fine. You need to burn one to kind of learn to learn one, I think, of what I think makes really great sense. But first, before we get into all the strategy, all the tactics, all the trading, say hello to me. Who's new in the room here? There's got to be a lot of new people in the room, never traded live with us before. I want to walk you through exactly what we do. And I want to invite you, the best way to learn exactly what we do. Hang on a second. Hang on. What am I in? Am I in at 71? I want to be in, hold on a second. Where am I in? 72, 77. I want to, shit. Okay. Sorry. I'm trying to juggle my trading while I'm trying to talk. And I don't know if it's going to be working, but at least we're going to give it a shot. Okay. Let me see if it wasn't a perfect execution, but it was good enough for what I want to do. Anyways, I'll explain everything as we go along. But first of all, who's new in the room here? Say hello to me. Yes, Caleb, thank you. Thank you for reminding me. I'm sorry. It was I meant to do it over the weekend, but I got distracted with a million other things. I'm going to do it today. I promise you. Everybody who came in on Friday to buy the deal. The deal, by the way, really good deal. Hang on a second. Let me pull it up. Just 1 second. I'm going to put the link in here, and let me pull this up, and let me explain to you what the deal is. If you want to trade with me and get the full access to all of my coaching, to all of these indicators, which you cannot have until you're a coaching client, and get everything that Kathy is doing and all of her signals and all of her indicators, which also you can't get unless you're a BK client. This is the best deal ever. It's 6 months, $597, and I'm going to give you back $97. Everybody who bought on Friday, I'm refunding it to you, as soon as we're done with live. Okay, I promise you. Sorry, I got distracted over the weekend. I meant to do it. So you can use that money. You can use the 97 refund to go out there and buy a ton of free Apex accounts, because at an 80% discount, you could literally buy, let me just put the link in here again. You could literally buy 3 Apex accounts for free and get yourself started on learning how to trade prop. Okay, so hopefully that clears it up. Caleb, will new here. High Apex accounts is what I have. Very good. Paige, good to see you. If you want the tool set, please join me, as I said, on the deal that we have here. It's a really good deal. 6 months of coaching on this deal. Okay. Okay, another mutant this year. Nice. Okay, so You have a stupid question. No stupid questions, only stupid answers. How does prop trading work, and can I trade FX with it funded? Okay, so Mutant, you can trade FX if you're trading with an FX-based prop firm. So our partner, and we will have an FX-based prop firm, I promise you. Hang on a second, guys. I'm just trying to focus over here. You know what I'm going to do? I'm just going to take this. I'm going to take this profit over here at half profit, just because I really want to focus. You guys saw like a very, very, very sloppy trade sequence in front of you that actually turned out to be positive, right? I just made money on the whole thing. I'm going to explain to you step by step exactly how I managed to fuck up this trade and still make money out of it. But we'll keep that for just a moment later. The reason I got out of it is because we're literally 3 minutes into the open, which is the time that we don't want to hold trades, and I wanted to make sure that I was net positive. So very simple question. Our best partner is Apex Trader Funding. They are extraordinarily cheap or inexpensive or high value prop. And you cannot anywhere in the world be able to buy a $50,000 account for $30 the way Apex allows you to do, and then be able to trade it with the kind of rules that they allow you to do and get it funded. I mean, you can see I have 6 funded on this one and 2 more funded out of wealth charts. And we literally have hundreds of funded accounts between me and all the members in BK. And we have also hundreds of paid out accounts as we go down the road. So I like trading futures. I like trading Apex because of the deals that they offer. And I also like trading futures as a product because the futures product is super clean. It's one price feed coming from Chicago Mercantile Exchange. It's one product. It's first come, first serve. So if I have the best price and I have one contract and Citadel comes in and has a million contract behind me, but they are one price below me or they're 1 second below me, I get to be in front of Citadel. So it's a really, really good product. I like trading futures. I hope everybody who's listening to me enjoys it. More importantly is if you've never, ever traded in your life, to begin trading is equivalent to you saying, hey, I've never driven a car, but let me try to drive Le Mans, or let me try to drive Formula One, right? Let me try to be Brad Pitt, but I've never been behind a wheel. You're going to get slaughtered. You're going to get absolutely slaughtered in real-time markets. And the beautiful part about prop trading is that you get to trade, you get to ride an F1 car, and if you crash it, it's a fake, it's like a fake crash. You basically, you can never die in a prop account because you're spending such small amount of money. You're not burning your own capital learning how to trade. So aside from just the actual possibility of getting funded and getting paid out with other people's money, the reason why prop trading is an incredibly great first step to anybody who's new in trading is precisely because there's no greater way to learn than to trade prop. You're trading with real market prices, real market platforms, all for literally a pittance. So that's the story. Okay. The crypto does not have, Apex. First of all, if you are not from an OECD country, like, an advanced economy, unfortunately, Apex is not going to be a solution for you. They don't take accounts from like a lot of non-advanced countries. We will have that's the CFD brokers, and we will have a partner probably starting next week, actually, where I'm really going to stand behind a partner that we really like. That's going to also, by the way, have the same functionality. That is, have my indicator on the charts. But for now, those people who are in basically Europe, North America, Latin America, and Australia can all access Apex accounts. All right. Let me focus on trading here. I have right now, as I'm looking at this, we have market open. It's market open 9:30. It's very, very early. But we have market open with the Dow Jones giving me a Christmas tree sell signal. And actually, look at NASDAQ going completely the other way around, right? So there's a $1.13, $1.11 on the time clock. we'll see if this sell signal holds, and if it doesn't, if it does, we're actually going to take it in my wealth charts account, because remember, wealth charts we're going to trade the Dow, and in Trade we're going to trade Nasdaq. So we will subdivide our accounts by instrument, which is one of the tactics we use. Unfortunately, no, it does not take African traders, right? So I will have a solution. Yes, UAE. I think you can have Apex in UAE. Absolutely, Middle East is good. Yes, it's a lot of it is just contingent on payment systems. Like if you're, if there's an easy payment system in your country, Apex will do it. If there isn't, they can't do it right now. So while I'm watching Dow, guys, 15 seconds left. If this thing stays red, it's a Christmas tree sell. So what I'm gonna show you, and how I'm gonna explain to you what I'm doing is super interesting. But give me a minute to focus on this. Jesus Christ. Okay. So sell market. All right. We're selling market, and where I sell it at 409. God. Okay. And I'm gonna sell it again. Sell it again. It's coming up against me. Can I drag this down? I'm going to drag it down. If I'm going to get stopped out, I get stopped out. It's nope. I'm not going to get stopped out, but I'm going to move my buy limit to over here. Let's see if I can survive it. Dow is just popping around all over the place. Let's see if I can survive this this trade. All right, excellent. I managed to survive both of these trades in kind of an interesting fashion, a little bit sloppy, but I'll explain to you what I did on this particular structure, and basically turning lemons into lemonade. You guys know, for those of you who are new to, those of you guys who trade with me all the time, you guys know that basically we take every buy, every sell signal. We practice what's called high probability trend scalping. Let me just focus on, actually, you know what? I think I can, let me focus on here because it's going to be easier to explain it of what I did here. Let me go to settings, trading, executions. Okay. Right. Okay. So, you can't barely see this, but you see over here, there's like a little green banner. Yeah, I'm going to mark it for you. And a green dot. That is our classic Christmas tree buy trade. We have two types of buy and sell signals. We have the regular buy and sell signals, and we have like the Christmas tree. The Christmas tree is just named because it's a green-red signal. If it's a sell signal, it's a red signal. If it's a buy, it's a green signal. We have a buy signal coming up right now. So I'm going to actually walk you through this structure as it develops. But the idea that we originally had was, hey, we're going to take the trade at the close of the candle, as we always do, right? And just let it go. We traded with a five target, 15 stop, just a basic scalp, very high probability scalp, and see if we can turn that into a winning trade. Then we realized that so many signals that we have actually retrace a little bit against us. In other words, we can get a better price for the signal than the candle closing price, right? However, and this is where the tension comes in, and this is where I finally figured out what needs to be done. Certain times you can actually buy at better price, but a lot of times it's also going to be a runaway trade. So let's just imagine, just for argument's sake, it's not 50-50, but it can be like, let's say maybe 60-40. 60% of the time it comes down and you get a better price. 40% of the time it just runs away. So if you're waiting for the price to retrace, and you try to buy it at a lower price than the closing price, you lose out on a winning trade, right? On the other hand, if you buy just to close, you don't really sometimes you get yourself into like buying the top, and you don't really. Sometimes you get stopped out if you if you bought the top. Whereas if you just waited for another 5 seconds, you'd actually be able to resolve the trade. So how do you solve this dilemma? How do you actually, oops, I got to go. Buy, long. Okay, so I'm long this. I'm going to show you how I solve this dilemma. I solve this dilemma by the following function. If I have a buy signal, I'm long, boom, and I'm long. Okay, here's a perfect example. It was a runaway trade. You had zero fucking chance to make money waiting for a retrace, right? Zero chance. However, how do you take advantage of that? So my whole thought was just basically a Solomonic compromise. What I'm doing is I'm coming in at half my position on the open. So if I get a signal, I'm buying it. If it doesn't go right away and hits my target and makes money, I'm going to buy the retrace. But this is just for NASDAQ. We're going to do NASDAQ and YM today as my structure at 5 points below my entry. Remember, I have a 15-point stop, right? So I'm going to buy it 5 points below my original entry. Here's where it gets interesting. Now I'm long 2 units, right? Whatever my units are. But here's what I'm going to do. The original stop is minus 15. The second entry, the stop is only going to be minus 10. In other words, I'm either correct in that this is a retrace and it's going to bounce back, or I'm going to get blown out. But I'm not going to get blown out at full 2-unit stop. One unit is going to lose only 10 points. The other one is going to lose the original 15, right? So it doesn't stop there. This is where it gets even more interesting. Now I deal with profits. Now the profit is a 5-point target. The first unit is a plus 5-point target. The second unit is a plus 5-point target. So what do? What I do is I actually move the first unit to just plus 2. So instead of looking for plus 5, now I'm only looking for plus 2 on the first unit, but I use the second unit to plus 7. So now I gone to a much better profit risk-reward ratio on the second unit than I do on the first. So overall, when everything is said and done, I'm basically like, I believe, I think I'm losing 150 if I get blown out, but I'm making about 60 to 70. So now I've gone from like 1 to 3 to 1 to 2.5 on the position. That really, really creates an incredibly interesting positive edge. So now we have a negative signal coming up here on NASDAQ. And I'm not even looking at the YM guys because, I'm just want to focus on one instrument right now. Actually, let's see if the YM is giving me any signals. No, YM's got nothing. So if I get this signal, I'm going to do the exact same thing to the short side. I'm going to sell it on the first entry. If it comes back up above 5 points against me, I'm going to add to the position and put a stop at a cap. What this does, I'm glad Paige is saying that I just read her mind. I'm glad that you like my solution. Yeah, this is, it's just, it came out of obviously me fucking up continuously and trying to figure out, trying to get the right mix and match of structures that is systematic. This is the big problem I had last week was like, hey, let's trade the retrace. But then what does that mean? Every single trade is different. Every single trade is kind of like, feel by the seat of your pants. You don't have any kind of a systematic approach. If you don't have a systematic approach, you don't have any way to measure your efficacy. You also don't have any confidence in whatever the fuck you're doing because every single trade is kind of feel by the seat of my pants. This is incredibly quantitative. It's determinative. You know exactly what you're going to do. You know exactly when you're going to do it. You know exactly how you're going to do it. So this creates a much more organized function to what you want to be doing as far as the trades go, right? So give me a yes, give me a no, give me I like it in the comments. Let me know if you guys understand exactly what I'm trying to explain to you as far as the 1-2 structure on this thing. My stops are always minus 15 points. So I'm 5-point target, 15 points stops. But remember that on the second unit, the stop now becomes only minus 10, not minus 15. I'm equalizing the stops at the original stop, and I'm moving my profits to about +2 from the second target and -3 from the first target. Yeah, I'll do this 1,000 times over the next week, and you guys will really get a good vibe for it. You get a good see. As you saw today, right now, basically three examples of this. One was where I averaged in and I made money on the short side. One where it was a runaway, I made money over here, and one where I averaged in on my Dow and managed to make money on the downside. Right. So all three examples kind of worked pretty well for us. And remember, you're not looking for every example to work. You're just looking for the majority of these examples to work. And that's the whole idea. The whole idea of this kind of a layered in retrace-based approach is that it gives you a higher chance of resolution with a little bit better risk-reward profile. In any business, if you can make a penny more on your P&L, it becomes massively profitable. Just the tiniest of edges, as long as it can be repeated constantly, that's where the money is at, right? So sell signal on the Dow, which is good because now we're gonna look at wealth charts, and we're gonna try and if this sell signal holds, we're gonna try to put that into play. So the same idea with the Dow. It's just, remember, the Dow is a 10-30 target. We target 10 points with a 30-point stop. So that means, what am I doing is, if I'm entering it at market, the second entry is going to be +10 to my original entry. And again, we're going to manage all the stops and targets the same way, except in this case, the second level target is going to be +15, and the first level target will be +5. That's all it is. There's actually, we get a chance to see this on the Dow here after, if in the next minute or so we get that sell signal. I'm going to put that into play. So Dow breaking the 45,000 right now as we're trading. Man, my nose is starting to itch again. Yeah, it also gives you a high degree of scientific experimentation. You can have a rational approach to understanding what you're doing. It's not like, every day something is new and different. Looks like the sell might be going away. Let's see it. The sell signal going away. They buy the 45,000s. It's interesting. The Dow is really holding that 45,000 nicely. So they're buying the 45,000. Let's see what it wants to do with it. We'll see how it plays out. Oh, if you're doing a mini, yeah, you could do 5 micros. But I'm just generally doing 3 micros as my starting position, right? So yeah, I would just divide 5 micros if you want to do that. Is that on a 50,000? You're trading a mini on 50,000. On a 25,000, I'm only using 3, which is frankly quite a lot too. If you really want to be super, super careful and almost have virtually no chance of ever getting blowing the account, you can do 1 micro, but that will take you about a year to get funded. I mean, that's fine. I think it's a good approach. It's just a very low risk approach. I'm picking the sort of middle ground of where I think the risk is reasonable, but at the same time also, cognizant enough that it can blow me out. Absolutely. It's a great question, Paige. The average winning trade is less than 2 minutes, and the average losing trade is more than 4 minutes. That's kind of like the answers. By the way, guys, I have a super cool video coming out probably next week on the YouTube channel. Everybody who's watching me live, be sure you subscribe to the YouTube channel because Kathy puts out amazing content. And I try to put out some interesting content. And this video is super interesting because I'm using ChatGPT to create a personal analytics dashboard for you. like analyzing your account, any account you have, your MT4 account, your MT5 account, your personal trading. I literally show you my personal futures trading, my real personal futures trading account, and show you how you could use GPT-4 to create the most amazing analytical dashboard that tells you everything you need to know, including like the data you were asking me. How long is my winning trade? How long is my losing trade? Super cool. Super cool. All right, I'm looking at Dow. Dow looks like it's flipping to a positive. Let's see if I get a buck 39 on the Dow. So if this goes positive, we're going to go long the Dow. We're going to long the Dow. We're going to move over to our wealth charts. I have a lot of cool stuff to show you on wealth charts as well. Wealth charts is, we're going to hang with me for a little bit because wealth charts has got an amazing new analytic dashboard in there. I'm just going to tease it a little bit, and then we'll probably make a video on it a little bit later. How long typically? Yes. Okay. I answered all those questions. Let me see if there's anything else here. Okay. Minute on the clock. So we're waiting for another minute to close. If this it's interesting. Look at it. The Dow really held to 45,000, and they're looking positive. I'm really impressed at how well the stocks are hanging in there. I have no idea if this is the calm before the storm, but it's certainly been very bullish stocks over the last few months. Eddie, what's this saying? Eddie, you're saying, good morning. With a funded, you profit $900 first day. That means you cannot profit more than no, I think you have to. I'll get to that in a minute. I'm sorry, Eddie. I got to focus on trading here. Buy market. All right. I'm long market on the Dow. Where am I in? I bought the Dow. I totally forgot where I'm at. I'm at 50. Okay. I'm at 58. And now I'm going to watch this. If this comes down to 48, I'm a buyer. I'm a buyer of additional position. If it goes to 68, I'm done. Okay, so that's basically the story. And where am I? We're over here. Oh, I got to go to YM. Sorry, guys. Let me just fix this a little bit. YMU. And it's which? Oh, I'm in the 115 account. Sorry, I'm a little bit distracted here on the web. So you can see me right here. I'm one offer, and I'm done. So runaway trade. See, runaway trade. I get done on NAS. I'll get done on Dow. Beautiful. Boom, boom, boom. I'm trying to minimize my trade-offs. As I said, there's always a trade-off in life. You can either buy the market, and sometimes get a bad fill, or get a runaway trade. So this case was a beautiful runaway trade. That's fine. We got that working. NASDAQ now. Okay, let's look at NASDAQ. NASDAQ's got a signal. So we go to my NASDAQ account. If this holds, that's a Christmas tree buy signal. 32 seconds left. We'll see if it holds. My stop loss for NASDAQ and for Dow, which is the only things I'm really going to be focusing on right now. Maybe tomorrow or the next day we can trade different instruments if you guys want. But let's not get. I'm not going to answer any gold questions or any ES questions because I just want to. I find that if we focus on one or two things, we do well. If our attention starts to spill over to a million different things, we don't do well. So right now, the only answers I'm going to give you is it's a 515 and a 1030 stops and targets YM and NASDAQ. Okay. If you want more questions on that, come join me in coaching. That's what coaching is for. Okay. So I'll put my coaching link in here. Happy to do that. Eddie, back to your question. If you're trading a $50,000 account, the maximum they want you to win per day is 750, right? So if you want like 900, you actually have to, what is that? You have to multiply that by, 2,700. You were absolutely right. You got to make 2,700 to get any kind of payout. Sorry, you were absolutely right about that. And the reason, of course, they do that is because they don't want people to just simply get lucky on one trade. Oh, I made $5,000 on market opening trade because I levered up maximum and I hit it lucky. Please pay me out. That's not, they're not in the business of paying out lottery tickets. They want professional traders who can make consistency. So that's why you have the consistency rules. All right, I got this buy turned to a sell. Look at that. Let's play the sell side. If it holds, it's a big ass sell off. And these, by the way, these big candles are certainly the best they're the big candles we know have only two type of resolutions. Either it's just gonna be a runaway dump, or we get a retrace move here, right? Now, I will say this, that in this candle, it's a 50-point candle. It's very, it could be very, very retraceable, meaning that we could be right under the direction and still get stopped out because our stops are just not big enough for this. But, we're going to give it the best shot we can. No strategy is perfect, but this is as good as we can get right now. So I'm going to just wait for the market entry open 21750. All right, I'm short on this. And where am I? If it gets up to 55, I'll be selling a second unit. I'll be selling a second unit if it gets up to 55. $57, I'm selling a second unit. Okay, so now I'm going to bring down the stops to over here, and we're going to bring the limits over here. I'm actually going to this is so fast moving, and I can't see what I'm doing right now because I usually only trade. Fuck. I really, really want to. Okay, here we go. I'm just going to close this out. I'm just going to close that out at plus 20. I should have closed it out at plus 50, but when I'm trading myself, guys, I have only one chart on the wall, which I should have just probably gone to full chart because it's very hard for me to see and move this stuff around very, very quickly. Regardless, we made money. It totally worked. It's like the fourth example of this strategy working in the last 20 minutes. And now we get a Dow example, which is going to be a little bit more easier for us to manage because we're going to go on wealth charts. That's going to give us more. It's going to give us a better view. So we'll stay on wealth charts. If this thing stays red, if I have a red dot in the close of this, we're going to go 1-2 on this as well. Yeah, it's not even just that, Nathan. If we just trade only gold and ES one day, fine. The single greatest mistake that any of us do is try to do too much shit. As I said to you guys, when I'm by myself, I never trade anything but NQ, right? I only trade NQ. That's how I get all my accounts funded. That's how I get my funded accounts moved in the right direction. No signal, by the way, on the way in. Right. So the reason I'm doing multiple instruments with you is entertainment. It's because to get you guys is to show you the strokes, to show you the trades, to show you the setups. And also because many of you guys like different instruments. Right. So it's really for your benefit. If it was me and I was just sitting by myself, you'd never see anything but NQ on my chart. But, people want diversification or whatever, variety. People want variety. Then that's why we do it. Okay. So that's why it can be a little bit hectic on the lives. Did we lose my audio? Does anybody give me a sound check, please? Do we have an audio? Audio testing 1, 2, 3. Yes. Do you hear me? Audio is good. Okay. All right, thank you. Okay, so whoever's lost audio, it's on your end. All right, hey, look at this self signal on the Dow. Again, we're flirting with that 45,000. They're really, really pressing the hell out of it. So, let's go see if this works. All right, we got a sell signal on the Dow. I got 27 seconds left. Let's see if this holds. 18 seconds left. As long as the red dot, red triangle are on the candle on the close, we're a go. We're a go on the sell. Sell. Okay, I'm in at a 90, and I want to be at a target is 80, obviously, but I want to be at 45,000. I want to be a seller for a second one, if I can get that. And we're done. Again, another runaway trade in YM. This is a it's a non-funded account. It's one. I'm going to run this account. Hopefully, we'll see if we can get it funded in a nice, clean fashion. But this is I have two non-funded accounts. I think I have 125,000. This one I should really be working this one, but I'm just chose this one today. And then we have two funded accounts. Once we probably get 4 funded accounts into wealth charts, we'll start trading the fundeds a lot more. In Tradeovate, I'm really, really trading fundeds at this point only. So look at that. That was a nice clean. Again, you don't get to choose runaway trade or retrace, right? The market determines where that's going to go, and you either want to participate. You want to participate with a half position. Half a loaf is better than none, right? Wow, look how cool that is. May. You know that May just joined us literally last week? Like last fucking week she joined us. I am so happy. It's cool. May, go slow, go fast, go do whatever you like. If you don't hit it, don't worry about it. You're going to hit the next one. If you're 800 away, it means you're doing a really, really good job. I'm hoping, by the way, that the scaling technique that I'm showing you could really, really help you. What are you trading, May? What are you trading NQs? And what account size you trading? Let me know. Yes, Paige. That's exactly the point. I'm actually my whole approach to all of this is I want to be trading this strategy for both pre-funded and funded accounts. Although I will say that that pre-funded accounts, I actually have another pre-funded accounts. If I'm close to the target and I have a lot of confidence in the trade, like if I have a lot of confidence in the signal, I'll just get large size. Like last Friday, I took 3 signals and I got myself 25,000 funded. The thing about that is you have to, again, make a trade-off and you say, I'm either going to burn the account or I'm going to get funded. Because the whole point is I want to get funded fast, so then I can work with a payout account as much as possible. Or you can say, no, I want to practice and learn on my pre-funded accounts, and I want to do everything by the book, because then I'm going to be able to do everything by the book when I get to the funded stage. There's two different approaches. Again, 2 trade-offs on the position, and the point is that you can do one or the other. I find that I like on the pre-funded side, I like just going large and in charge, but that is not certainly that may be good for me, but it's certainly not good for you if that's not the way you want to trade. A lot of people have a lot more success just being very careful and trading the pre-funded strategy the same way. So it's all dependent on where you're at. Where am I on here, by the way? Okay, that's cool. This is 25. So this is a funded account. If this account needs to get to about 27,000, it's maybe 1,000 away from there, nice and slow, and that goes to payout stage if it gets to 27,000. So we'll see how that works. So watching for signals. No, so Nico, it's actually much more. 60-40 is in terms of percentage terms. Like how many of them are runaway? How many of them are retrace? I think so. Oh God, sorry guys. God, I hate allergies. Okay, sorry. So yes, 60-40. I think on a retrace runaway basis, but that's just it all depends. Today it's all runaways. Like look, Dow is just all runaways, right? All right, May is telling me a mini Nasdaq, only 50K account. You blew away a few of things, but I think I'm getting the hang of Dow strategy. To buy and sell accounts like you. Nice. That's a really, really good approach. So you're trading one mini per trade. That's pretty good. If you want to, I don't want to, mess up your vibe, but if you're trading one mini, you could take a page from what when somebody else in the room was talking about. I forgot who it was. Somebody said that to take my approach, they would just take 5 micros on the initial trade. If that works, great. You take the money. If it does, if it starts to retrace 5 above, you just sell the other 5 micros. And again, manage the stops on the targets. Just manage the stops on the targets, and you're good to go. Oh, sorry guys. It's like rainy weather. Rain just triggers sneezes from me like you wouldn't believe. Time is it? 10 o'clock. Okay. So let's take I want to take a little pause away from the charts. We did a fuck ton of trades already. Every single trade in the YM was a winner. Every single trade in the NQ was a winner too. So let's just take a pause right now from live trading because I want to just show you a couple of interesting things. First of all, and I'm going to give you a very, very, very cursory view of this because there's going to be a full video that I'm going to do on this. But for those of you who are on wealth charts, and I highly recommend you at least get some wealth charts accounts. They're great accounts, great platform. They instituted this really, really cool feature in their thing. Where is this? Wealth tracker. Right over here. If you go into wealth charts, into the big menu, into trading, into wealth tracker, right? This feature is absolutely awesome. I'm going to just drop it right over here just to show you. And I'm going to go full screen on it just to show you some of the unbelievable stuff that they have in this analytics dashboard. It's basically a fully analytic dashboard, and it's divided into everything. Like one of the things is, remember, is it actually look at this. It shows you just like TradeZella. It shows you a calendar view of all your trades, right? Wow, look at this. I made $775 on this account. That's nice. I didn't even know that. On the, what was it, last Tuesday? That was cool. So it shows you just like TradeZella does for no money. TradeZella charges you $50 a month. How well you do on a calendar basis, right? But where it really, really shines is it pulls all the data from every wealth charts customer and tells you where's the market right now by the open order, who's most bullish, who's most bearish. So everything is kind of 50-50. YM is most bullish over here, right? You can see that. You can see all the charts. You can see this is the top, I believe, top 5 winning traders have the best winning rate. Hourly best hour by win, 5 a.m. Most profit 5 a.m. That's kind of interesting. Of course, this is our lifetime, and I'm always bitching about the fact that 9 to 10 is a really hard time to trade. 11 to 12 is the money hour. The money hour, in my opinion, for anybody who wants to trade. This is also being proven very much by the statistics. Top 50 performers. Here's what I want to show you. That's it's actually really interesting. Today, because I was looking at it on Friday, and what was very, very interesting is that all the best performers had either I believe, if I'm looking at this is a 1 to 2 risk reward ratio, or like maybe 1 to 6, meaning that they're risking more than they're winning. And if you ever wanted to understand why I do that, you can just simply look at the validation for the fact that top 50 performers are doing it. All the other ones are trying to risk more for their rewards, and they're losing. Top 50, 84% of them use stops. Where's the bottom 50? I don't see revenge trading. Everybody does revenge trading here, individual performance. There's all sorts of stuff here that's super, super interesting that you guys can look. See, bottom 3 performers that took huge losses, right? Where's the top 3 performers? We have this. Top 3 performers, total profit. They're hitting all their rates. Right now, honestly, it's Monday. The data is just not very deep enough to do the full analytics, but it's really worthwhile just to kind of look at this thing as a tool set. And I'm gonna do like a whole video on this to show you. Oh, we missed a buy signal in Nasdaq. Okay, that's fine. Yes, 11 a.m. is New York time. I'm always talking, and it's not just USA times, it's New York, USA. We're using East Coast time as the dominant time. All right, Paige looks good. Paige, where are you from, by the way? And do you ever get teased about the Partridge Family, or is that like, or am I just way too old to actually bring that cultural reference into the mix? So the other thing, everybody is cracking up. Ben is cracking. Ben is cracking up. If you understand the word Partridge Family, you are way too fucking old. That's just the bottom line of it. Okay. One last thing I kind of wanted to show you. She gets all the time. She gets teased all the time. All right. I love that show. It was like the greatest show. Keith Carradine, right? No, David was, sorry, not Keith Carradine. It was David Carradine. Right? Susan Day, man. Who did not have a crush on Susan Day when you were watching the Partridge Family as a young kid? Okay. David Cassidy, right. Jesus Christ, I totally forgot. Danny and Keith Partridge. Oh, that's funny. Oh, that's great. Okay. Here's the other thing that I kind of wanted to share with you guys. It's absolutely random, but it's super, super interesting. And there is one thing I'm going to leave you with that I think is super interesting for us as traders. So you guys know I've been reading all these books about quantum physics. I decided to move my reading away from quantum physics and more into biology and psychology. And this book is amazing. The Molecule of More. It's really all about how dopamine controls everything that we do. I mean, to an extent that you can't imagine. Literally, you read this book, you begin to understand that we're nothing but biochemical machines, where if the wiring goes, like literally almost all of our behavior is completely and totally controlled by this chemical. Super, super fascinating. But the big takeaway, and I'm only halfway through the book, and I'm going to probably, read it several times to really absorb a lot of its lessons. The single greatest interesting takeaway, and by the way, the fascinating part about it, just as a throwaway idea, is that dopamine is both a desire chemical. In other words, it forces us. It constantly creates, incessant desire. So drugs, sexual drive, even food, all of that creates, but it's also has a completely different control circuit as well. In other words, dopamine can trigger an addiction, and dopamine can actually cure an addiction, which is super fascinating as a function. But for our purposes, the single most interesting insight that I got out of it is we're all, by the way, if we're trading, we're all dopamine addicts. It's like that's not even a question. We all, we're looking. Dopamine is basically dopamine kicks in when you get a positive, pleasant surprise. what the fuck is a take profit but a positive, pleasant surprise, right? We don't know if we're going to get that surprise, but when it happens, it makes us happy. That's all we're looking for, right? So that's fine. I mean, that's just human. We're all monkeys. We're all responding to stimuli. Trading is just an incredibly interesting game of stimuli for us. But here's the interesting insight that I got out of it that really helped me on the other side. Because let me ask you a question. How many of us get absolutely out of control the moment we lose? What I mean by that is the moment we lose, all we want to do is get it back, right? Like that feeling is much, much more powerful than, oh, I missed the trade. I missed the trade. I don't give a shit. But I lost in a trade. The feeling within me, like I need to get it back now. This instant, I must get it back, is beyond overwhelming. How many of you, I'll put, actually, you know what? I can't, I have, if I put this link, it's going to be a bad link. I need a short link. Where's the short link for this? Fuck. Oh, here it is. Here's the short link. Copy link. I'm putting a link in the chat room. So Lee says this. Okay, Lee's the only honest person, and Gina's the only. The women are the only honest people in this room. All you bastards over there. I know every one of you. Every one of you. I guarantee you, men, even 10 times more than the women, need to get it back. It is an absolutely overwhelming urge that you can never control, right? I think we all have it. I mean, that's, to me, the greatest, if that's my greatest weakness. My greatest weakness is I need to get it back, right? Which triggers the whole downward addiction cycle of, I get stopped out, because that's when I start chasing trades to the downside. I start averaging in. That's how I blow every one of my account on that one single dopamine-driven circuit, right? So what's interesting about that, and what's fascinating from the biopsychology point of view, is that you think you are trying to get pleasure. You think you're trying to get the next profit target, so therefore you achieve pleasure. But what's actually happening, and this is, you think of yourself as a crack cocaine addict, because it's a really good analogy. We all are. Fortunately, we don't have the problem that people who are seriously addicted to chemicals do, but it's the exact same circuit. So when an addict needs a fix, and in our case, the fix is to fix the loss, right? They're not looking for pleasure. They're not looking for pleasure. It's just to stop the pain. So the high isn't a pleasant high for an addict. It's just to stop the pain. It's just to stop that unbelievable pain inside of you. Like, I need to release this pain, right? And that was like really interesting for me, because I realized I'm not trading to win or repair. I'm just trading to stop the pain. Now, once you realize that you're just being a fucking idiot and you're just trying to stop the pain, and big deal, wait 5 minutes, and when the setup occurs better for you, you might have a much better chance of winning. You can step back from it a little bit. You certainly, one of the things that I've done subconsciously is you just simply go into a different account. The moment you go into a different account, you've already lowered your pain threshold, because now it's not a festering wound. That account is no longer in your mindset. You have a new account that doesn't have that festering wound of a loss in it, right? So you already can be calmer. But the point is, if you just consciously say to yourself, I'm not trading here. I'm not making this trade because I think I can win. I'm just trying to stop the pain. You realize how much of an asshole you are. You just realize how you realize that you are doing this from the wrong motive. And you can step outside of yourself for a minute. You can say, oh yeah, this is really stupid. This isn't going to benefit my account. This is just simply to stop my pain. So fine, I don't give a shit. I'll trade another account for a while. I have 1,000 of these. This is the beauty of Apex, is that we can have so many accounts and we can step away. It's a great beauty of prop trading, is that we're not, and by the way, I do this with I started doing this with my own personal accounts where I trade several accounts at the same time. Made a huge difference on the smoothness of my P&L, because again, I'm removing the festering wound as quickly as possible by just not even being inside that environment. I'm changing the environment, and that's kind of an interesting insight, right? I think it was an interesting insight for me. I don't know if you think I'm just blabbering, but I thought that was kind of a really, really interesting insight, that you think you're doing something constructive, but in fact, you're doing something truly destructive in that moment of time, because you're not looking for the high of the take profit. You're just looking to stop the pain of the stop loss, which is just kind of stupid, right? Does that make sense to everybody? Speaking of which, buy signal on the Dow. So let's see if we can make that play happen. 59 seconds on the trade. Dennis, please email me. Anybody who's if you're in my coaching and you've opened a Wealth Charts account and you don't have Wealth Charts enabled, please email me and I'll get it done. I'll email Rob and we'll enable you hopefully before the end of the day. So yeah. $16 seconds on the thing. Well, so Paige, what we try to do is we trade one long account, one short account. Or like I trade one account until I lose, and then I go change to a different account. And I trade that account, and then I'll come back to the losing account when I'm nice and calm and cool, and I have a setup, and I can try to repair that setup. Yes. I go to another eval account and trade not even different instruments, same instrument. I don't give a shit. I told you I trade the same instrument. The instrument doesn't hurt me. The stop loss hurts me. It doesn't matter if the stop loss is in gold, in YM, and this. The destructive dopamine cycle is a function of the stop loss, not of the instrument. The instrument, the market couldn't give a shit. Every instrument is going to stop you out. Every instrument is going to take profit. It's a matter of a setup. So no, I stick to the NQ all the time. I don't just go, NQ stopped me out. Now I got to go to my new boyfriend, YM. No, that's actually something I don't have any issue with. No signal on the YM, by the way. We kind of just sort of 10. This is the 10:30 lull. So when I tell you guys 11, what I feel like where I think the greatest, what we're looking for basically is just continuity, right? We want an hour of continue. You know what we want? This is what I want. All I want in life is just this. I just want this in my life. If I have this in my life once or twice a day, I can eat forever. I need a half an hour of just continuity. I cannot fucking lose in this structure. I cannot lose in this structure. I need a half hour. This has actually been from today was actually a really good day in NASDAQ. You had like these nice clean 448 to like 45 minutes of continuous greens, continuous reds. You cannot fucking lose when you have this, right? What I don't like is this shit, which is what we're getting now. That's our toxicity, and we got no signals here. But if I can get 45 minutes of continuous flow, I'm going to make money on every one of my scalps. So my point is that I think that 10:45 to 12 noon is that opportunity, of that 45 minutes of continuous flows during the day. That's all we're looking for. So find me that golden hour, and I'll trade it, to my heart's content. I cannot lose during that golden hour. All right, my friends. Who else is new here? Anybody? I see more people joining me. Everybody on Twitter. Guys on Twitter, by the way, take the QR code, get the discount on Apex, get the accounts, because that discount is going to go away soon. And the greatest thing is to have like 4 or 5 of these accounts, and you can just flip around between them, trade them with reasonable size, and you're going to be able to get funded 2 or 3 of them right away. I mean, I'm loving the fact that we just had people literally last week join me in coaching, and they're already on their way towards passing the eval, which is awesome. I never expected that. Anyways, if you guys want to join me for coaching, that's going to be this Thursday. Absolutely. Here's the deal. And yes, Caleb and everybody else, I'm not going to forget. I'm going to end the session like 10:45 today, specifically so that I can go give you guys the refunds, and you guys can use that to go out there and buy the Apex accounts. Remember, if you want to buy the Apex accounts, please use this link, because that will give you the greatest discount right over here. I just put the link in here for you guys. It's also QR coded on there. While we'll sit here and wait for trades. So from a tactical point of view, John, nice to see you. Where are you from? I feel like you're from Jersey. It's like John from Jersey sounds like the right background for you, but maybe you're not. John, you look like a very dapper young gentleman over there. Is that you on that picture? Netherlands. Okay, that I could not have predicted in 1,000 years, my friend. But that was great. Okay, nice to have you along. Everybody who's a European, come trade American futures with us. That's where the money is at. We're back to America, baby. No, I'm just kidding you. But really, U.S. futures trade 23 out of 24 hours. They're super liquid. And all of you guys who are trading CFDs, those prices are the Dow 30 that you guys are trading. It's based off this futures. The NASDAQ 100 CFD you guys are trading is based on this futures. That's what makes the markets. That's where the prices are coming from. So come trade futures with us. It'll be a lot of fun. But also, those of you guys, it's actually makes. I just realized, I told you guys, I really want to do a Asia session trade with CFDs, because I have all of these tools on the CFDs part of it as well. So I think we're going to do like 2 times a week. I'm going to start doing this because summer's coming to an end. I'm totally vibing this. We're going to use this. And the cool thing is my strategy of scaling in is going to work even better with CFDs, because we have like really cool execution tools on the CFD site. So yeah, I'm probably going to do a couple of Asia session trades. Maybe I'm going to do Tuesday, Wednesday. I think that's what I'll do. Maybe we'll do those. My whole family is away on vacation. I have nothing to do, so I could trade Asia with you all the time. Yes, U.S. futures trades are very low. Not only that, by the way, but of course, you guys understand that on futures, we're trading futures, right? One part of my trade is always market making. In other words, if I'm buying market, but I'm offering out, I am on the offer. That means I get swept at the best price. You see that all the time on the ladder here. Wow, look at this. Look at NASDAQ really popping up. You see that on the ladder. So if I'm buying on the market, right, and instantaneously I'm offering over here, that means I am the first person to get executed because I'm on the offer. That's the beauty of futures. Whereas on CFDs, it has to go to my bid in order to get done. Bobby Axelrod? Okay, Bobby Axelrod. I love that name. That cracks me up. All right, let's see how much of a Damian Lewis fan you guys are. Okay. If you give me the answer to this, I will actually give you a free $50,000 Apex account if you know the answer to this, okay? Because this is truly obscure. You got to be a true Damian Lewis fan to know the answer to this. What? And don't fucking Google this on me. You bastards. Do not Google this on me. What was Damian? You got exactly 5 seconds to answer this question, so I'm not going to let you Google it. You got to either know it or not. You got to type it in the chat box. What was Damian Lewis's first U.S. TV series? Name that series. It was a great fucking series. Let's see if anybody knows the answer to that. Nobody? 1, 2, 3, 4, 5. Gone. Not Band of Brothers. I know you're going to say Band of Brothers. No. Good answer. But he was in a series called Life, which was fucking awesome. Not only was it awesome, there you go. Lee knows the answer. Life. The greatest ending of any TV series ever. Okay? I'll tell it to you tomorrow. I'll keep this way everybody can come back and hang out with me. But it was literally the greatest ending of any TV series ever. The coolest ending ever. Made me Damian Lewis fan for the rest of my life. It was awesome. So anyways, yes. That's so good question. Aldo. If the way it works in futures, which is very different from CFDs, is if you blow the account, right, it will get renewed the next month. And if you got it at a big discount, like at an 80% discount, it's actually going to get renewed at that big 80% discount rate. Now, if you don't want to, renew the account and you basically get next month, you get a fresh account that you can trade at like that 80% discount. But if you say I don't want to do this, I'm done. I want to cancel out. You just hit cancel and it won't renew. But futures are different than CFDs. It's not like a one. Just buy one and burn it. In futures, they give you the opportunity every month to redo it if you want to do it. Oh man, Homeland is also awesome. Oh, we got a sell signal in the Dow. Let's play this. Let's play the Dow if we can do this. So Dow finally breaking through that 45,000. 55 seconds on the clock. Let's go to our charts. Let's see if it wants to do anything for us. 47 seconds on the clock. Does it reset every time it's renews? No. Like it only resets if it's no, it doesn't go back to zero. Let's say you're at $52,000. It keeps that $52,000. It just simply charges you for the next month. But if you blew the account, it resets down. It resets at 50. So it's the best of both worlds. You get to keep your P&L if you're deep into the account, but you get to reset if it doesn't. If you blew it. 5 seconds left. 3 seconds left. Sell. Shit, where am I? I'm at 63. Fuck. All right, 63. That's a shitty fill. So it doesn't matter. We got filled anyways. So that was, see how fast it was. It's just like there are no retraces. It's just all runners in the Dow today. So that was a shitty fill because it was so much fast selling, which is good. Dow is actually I really like the Dow as an instrument for scalping, because when it goes fast, I told you, what's our job? Our job is to capture, I don't know, 50 points of range in NASDAQ, right? NASDAQ has usually a 200-point range. So maybe if we can do 50 points in a day, that's wonderful. We get 25% of range, right? However, The Dow will do 500 points of range. Sometimes do 1,000 points of range. There's just so much range there that for us to capture 100 points of Dow, which is 100 points of Dow, just to give you an idea, is massive. That's it's $500, right? 500 points of Dow. It's $500 in a day that you can capture. Now, if you do 1,000 points of range, that's only 10% of range. You really, you have a very decent chance of doing that. So Dow is a really, really good for this kind of a thing where we're doing 1, 2, 1, 2, 1, 2. Not a lot of volume. It's excellent. The problem with Dow is, of course, if you want to go 10 large or 20 large, it's pretty thin. It's not going to trade. It's going to slip you a lot. But on 1, 2, it's really, really good. So does that answer your question, Ollie? Yeah, correct. That's Ben, you were able to summarize it in one sentence much better than I was able to explain it in 2 hours. But that's it. Yes. That's exactly it. Me too, Lee. I definitely have a man crush on Damian Lewis. Okay, well, guys, you know what? I got to run because I got to go refund everybody who got. By the way, if you guys want to get the coaching, I'm going to put this up here one last time. Go ahead and do it now, and I'll refund you right away, and you'll be able to use that money to go get yourself some free Apex accounts and try to get yourself funded. So thank you guys very much. We're going to do this tomorrow. I really liked today. Today was like, I did not expect, honestly, guys, I did not expect this because it's pretty complicated. It's pretty convoluted. It's brand new. I did not expect the retrace runner strategy to work as well as it did in live trading today. I mean, we hit every fucking trade today. That was money on every trade. So great. Let's keep it going. I see you guys tomorrow. Enjoy it. Play around with it as much as you can. And, everybody have a wonderful rest of the day. Thank you so much. Okay. Thank you, guys. Thank you, Eddie. Thank you, Miguel. Thank you, everybody. Marathon? Oh, yeah. Ben is reminding me of marathon. Usually we do this like Wednesday. I think we're going to do marathon Wednesday. See, you guys are very lucky. My whole family is away, so that means nobody's bothering me. So I could do marathon 24 hours if I wanted to in my little cave here. But yeah, we'll probably do Wednesday marathon. Absolutely. Why not? Why the fuck not? It's going to be great because we're going to do the run or retrace marathon. Maybe that's what we're going to do. We'll do the strategy completely on this move here. So it'll be awesome. All right, guys. Hasta luego. I will see everybody tomorrow. Thank you again for everything. Everybody who's new, number one, subscribe to the channel so you know exactly when I'm doing lives. Number two, oh shit, over here, join the community because then I will be able to give you the links in our community. Make sure that's our free community. Make sure you come in there. We're up to 6,000 people in 3 months without a single, not a single ad, just all organic growth, guys. So the community is really getting very nice and big. And what else I want to tell you? Now I lost my train of thought. Oh, yeah, and we'll try and do a marathon. We'll try to definitely do a marathon on Wednesday. All right. Everybody have a great day. I'll see you guys later. Bye-bye.